All right, and on the show today, we'll have Nishchal Maheshwari's outlook with regard to how he's viewing the street and how the week was on D Street. We'll try and sum that up, give you a perspective. Of course, forward-looking cues as well is what we will touch upon. So that's what we can look forward to. Snehi.
Absolutely, so much to talk about, especially the way the week has panned out this time. Very surprisingly, it's actually been IT that's managed to hold its ground, and it's actually all because of the kind of fall that we've seen in the rupee. Remember, the rupee depreciating against the dollar is beneficial for a sector like IT that is largely an outward-facing one. And yes, Nifty IT has ended the week, the truncated week that is, with an uptick of about 3%. But everything else has ended in the red. Or in fact, pardon me, you have Nifty Metal that's done really well for itself along with Nifty Energy. Everything else, including a Nifty Bank, Nifty PSU banks, you have Nifty Pharma also that has seen some elongated cuts coming in this time for the sector. That's not done well. Tempered moves coming in on the small cap index, absolutely flat, while the mid cap index was low by close to 0.8%. So the broader markets have done their fair share of keeping things stable, but the kind of momentum that we were expecting to see, we're not out of the woods as of yet completely. Even the Thursday's trade was a stellar one, with the second half of the trading session only focusing on the 500-point plus recovery that was seen from the day's low. So Harsh, all in all, very good day of trade on Thursday, and overall it's been a decent week for us given the kind of fall that was seen initially compared to the recovery that we saw later.
Well, yes, and a bulk of that recovery also came towards the latter half of Friday. So that too really stood out in terms of the way in which that played out. But let me bring on board Nirav Voda, Senior Vice President, Research Advisory, Equity Broking Group at JM Financial Services Limited. Nirav, great having you. Talk to us about how you're looking at the kind of recovery we saw on this Friday.
Good afternoon, everyone. Good afternoon to one and all. So see, clearly, since last 1 month, we have seen a huge amount of carnage as far as the Indian equities are concerned. And for that matter, the entire globe is concerned. Many indices across the globe have corrected anywhere in the range of 10 to 20%. The likes of Korea, even we have gone down almost 12% since the war has started. Talking about oil, from an average of roughly $65 per barrel, we have seen it touching almost $120 per barrel briefly, and then hovering between $95 to $110. Currently, again, it is hovering around 108 to 109. So clearly, we feel that the volatility is here to stay, because every 4 or 5 hours we are, listening to some new data points as far as the Trump tweets are concerned. So going into the next week, a lot of data points are lined up. Talking about the US markets, first of all, we will have the US inflation CPI data coming in next week. We will have the FOMC minutes of meetings on 8th of April, that is next Wednesday. Again, all signals will be, all eyes will be on the interest rate scenario, which the Fed will talk about, keeping in mind the West Asia conflict. And obviously the start of Q4 earnings season, with TCS coming out with the numbers on 12th. So a lot of anxiety will be there. I'm sure even today we saw a lot of, volatility in the market. In fact, we were a little surprised the way markets, pulled up in the second half of the day. But honestly, we were expecting 22,000 on Nifty today itself. But fortunately, there was some respite seen today. So clearly, we are expecting some kind of volatility moving into the next week.
Some volatility is what you're foreseeing. Nirav, hi, and thanks for your time. Give us a sense of the kind of moves that you're expecting to see in a sector like IT on one hand that has done really well, and on the flip side, PSU banks that have seen quite a lot of pullback coming in on that index. Do you believe that dip is going to be bought, or does it look attractive enough to be bought and maybe some recovery seen in the next week?
So talking about ITC, clearly in the month of February, before this particular war started, I think IT index was down almost 20-25%. Most of the large cap IT names have corrected anywhere in the range of 25 to 40%. The likes of TCS is down almost 45% from the all-time high levels. Many mid cap IT names have corrected anywhere in the range of 25 to 40% again. So all eyes definitely will be on the IT space. But overall, if you look at Q4, we are not expecting, big bang numbers as far as Q4 is concerned. Selectively, there will be companies where we might expect good set of numbers. Like from the small cap space, we are expecting decent set of numbers for Sagility. From the large cap space, around 1 to 2 to 3% kind of constant currency growth as far as the large cap names like Infosys is concerned, and some names here and there in mid cap space like Emphasis and Persistent System. But by and large, we are a little cautious at this point in time because the overall AI disruption which we have seen, and across the globe, not only in India but many other countries where the IT names have corrected significantly. So it will all depend upon the current conflict, the management guidance, which will be very, very important. What they are looking at, in terms of the growth numbers going forward, how they are looking at this particular conflict in the West Asia, and what would be the repercussions eventually in the Q1 of the next fiscal. So all in all, better to be a little cautious. We will see the numbers, how they pan out, and then we will take a call. Talking about the PSU banks, definitely we have seen a good amount of correction in the PSU banks, which were the darlings of market since till this particular war started. Obviously, PSU banks have outperformed the private banks for sure in last 1.5 years, because a lot of companies, a lot of PSU banks have come out with decent set of numbers, be it on the top line as well as the asset quality has really improved. But having said that, there was some pockets where the retail especially was on good chunk of profits, but because of the carnage which we have seen across sectors, some kind of profit booking has been witnessed in PSU banks as well. So at this point in time, Bank Nifty is a little nervous. It has underperformed Nifty. So we will definitely wait and watch. We still feel that any escalation in the war over the next 10-15 days, again, the banks will be on the back foot. So at this point in time, it's better to be a little cautious.
Better to be a little cautious. Okay, Nirav, so what are your picks therefore in a market like this?
Two picks for next week. One is from the power and utility space. So my first pick is Adani Power. So if you look at Adani Power, it has nicely moved from 130, 140 odd levels, and it is currently hovering around 160. In fact, in last 1 month, in spite of the carnage across board, we have seen Adani Power, moving on the north in a very gradual fashion. So overall, it is one of the largest thermal power producer, and as far as the management guidance, it is going to reach a capacity of 39.5 gigawatts by FY32. Also, if you look at the summer season, this time should be a little aggressive in terms of severity, because of the El Nino effect, which eventually we can see from June onwards. So we are expecting a very intense summer, right, from April till June. So from that perspective, the power demand can definitely go on the north. So my pick is Adani Power. We can keep a stop loss of 152 in case there are any escalation in the war. But on the upside, we are expecting 175 levels over the next 5 to 10 days. And my second pick would be Maruti from the automobile space. So now talking about Maruti, definitely Maruti has come out with very strong set of monthly numbers which were declared day before yesterday. So talking about for the month of March, the numbers were somewhere around 225 units which were sold on a month-on-month basis, which is a good 17% upside on a YOY basis, which is quite encouraging. Also, if you look at the annual sales, it has been a record year for Maruti, where they have sold around 24.2 lakh units in FY26. So that is really encouraging. The only thing is the ongoing conflict, because of which we have seen a good amount of carnage in the stock price. From 17,000 odd levels, it has corrected to 12,000 odd levels, which is a good, I think, 25-27% kind of a correction. So broadly, a lot of headwinds are behind us. In fact, there are any news of de-escalation in over the next week. Probably we can see a good spike in this particular stock price to the extent of 7 to 8% on the upside, and my immediate target would be 13,600.
Okay, got it. Wonderful to hear your perspective today, Nirav. Thanks so much for your time today.
Thank you very much.
Thanks so much. Okay, we are shifting focus then and taking you through a rundown of everything that made all the headlines in the week gone by. Let's take it across to Meryl for that list. Meryl.
Well, yes, here's what made headlines in this past week. Nifty ended down 0.4%, while IT gained 3%, and metals also outperformed with a rise of 2.6%. Firstly, the rupee saw sharp volatility. It slipped close to 95 for a dollar levels before bouncing back to 93 levels after the RBI tightened the NOP limit, forcing banks to unwind their open dollar positions and improve supply in the market. Coming to the major indices, we saw PSU banks as the biggest laggards this week. Bank Nifty also fell around 1.3%, while broader indices stayed under pressure. In fact, Nifty IT was one of the only major sectors to end in the green, up around 3%. Globally, markets were also reacting to Trump's latest press conference, where he claimed that war is near completion, but also warned of escalation. This led to oil seeing massive swings in the last day of trade. Oil actually saw wild swings during this entire week after hitting highs of around 108 per billion barrels. It cooled off quite a lot, but also surged again post-Trump's comments, keeping fears of inflation quite elevated throughout. Finally, on the domestic side, auto sales remained exceptionally strong. We've seen OEMs such as Maruti Suzuki, Tata Motors, Hyundai and Kia reporting exceptionally strong numbers this time around. So all in all, it was quite a volatile week driven by currency moves, oil swings and also sector rotations, with IT emerging as a key safe haven.
Okay, thank you so much for that, Meryl. Let me go across. We have Nishchal Maheshwari joining us, market expert, of course. And Nishchal, what are you doing in markets? It's such an interesting time, but a volatile time. Are you taking advantage of the volatility?
Hi, good afternoon to you and your viewers. Yeah, I think it's an interesting time. I think this is a time to start accumulating in these markets. I think there are 2 or 3 things I would like to highlight. I think this is the third year basically where we have in the same month of April from 24, 25 and 26, we are at the same level. And in the last 2 years, we have had earnings growth of around 10 and 12%. And still we are at the same level, which means basically the market has corrected quite a bit. And there has been a long time correction. So I believe that the worst is already priced in. Every fall now should be a buying opportunity in this market.
Nishchal, interesting you say that the worst is already priced in. Does it mean that we're looking at better days, maybe in the green or maybe not such sharp falls that we've been seeing in the red heading into next week, do you believe? Or maybe in the slightly near to medium term also. Is that now where you think the markets are going to be headed? And if so, what looks like a good opportunity to buy at this moment?
So I wouldn't say that you will not see sharp falls and rises, because the volatility will continue to be there, because there is a geopolitical event where overnight issues are going to crop up. But what I'm trying to say here is basically this is a good safe place basically where you should start buying, and every fall one should keep on adding. So if you are spending 100 rupees, maybe buy your 10-15% here and wait and see basically if you get another 500 points, buy another 15-20%. So that's a way basically, because nobody can call bottoms. So it's better basically that wherever enough correction has happened, if you really look at it in the longer term also, I think the valuations are now at 17-18 times FY27. And here I'm assuming that earnings more or less is going to be flat from 26 to 27, unlike what most people are expecting, a 10 to 12% growth in earnings. I'm now saying that given that the oil prices have run away, we are going to have a more or less a flattish kind of a number, 1150 for 26 and 1200 for 27. And then that kind of a number basically 17-18 times gives you a target of around 21,600. So that's a good price basically to start accumulating these stocks.
Nishchal, what exactly, give us a perspective in terms of a sector tilt that you have? Some of the large caps have really fallen, the likes of some private sector banks. I was looking at some numbers earlier today. Kotak now trades at 1.9 times 1 year forward book. Not seen that kind of valuation in very, very long. Is that something that's looking attractive to you?
Yes, definitely. I think banking looks very attractive. Last 2 years, they're not performed. Private sector banks specifically, we have never seen them this cheap basically in the last 4 or 5 years. And I do not see any reason for that to happen. Given that there is an earnings of around 12 to 15% kind of a number basically for most of the banks. They have sufficient capital. There has been no worry as far as the credit quality is concerned. So why is being a bank so available so cheap? Is for the reason because majority of them were held by the FIs, and FIs are actually selling India, and whatever they are selling. So banks are, that's why, coming under pressure. Now, I think at these prices, one should start accumulating. Definitely, the banking is one of the sectors. And in the short term, I think IT is another sector, basically, I would say, as a trading play. And I'm very clear, a trading play. I clearly see a 10 to 12% or 10 to 15% upside in the IT in the next 3 months.
Okay, so that's the take coming in. Banks looking good and IT looking good on a trading basis. Nishchal, stay on with us. We'll continue this conversation on the other side of this very short break. So viewers, time to slip into a very short break and be right back to continue that conversation.
Okay, welcome back. And Nishchal still with us. Nishchal, I have 3 minutes, so I'm going to ask you 3 very quick questions. You can't take more than 40 seconds to answer. Quickly, with regard to Interglobe Aviation, what's the view there, Nishchal?
I think this is a good price to actually buy it.
What about value retailers? You know, some of the value retailers have come out with numbers. The numbers were very strong. The likes of a Trend, DMart were buzzing yesterday in trade on Wednesday. Give us a sense, what should one do within the retail pack? What do you like?
So if you have it, basically hold it. But I think at these valuations, there are other sectors and stocks which are much better as far as valuations are concerned. So if you have it, just hold it.
And how are you playing consumer?
So consumer, basically, I think autos is the way to play consumer.
What's your favorite auto pick?
Mahindra and Mahindra.
Excellent. And what are you totally avoiding at this point, Nishchal, in Indian markets?
The whole market is fairly...
Hence the trick question, Nishchal. All the buys, but I need something that you wouldn't touch at this point.
I would say basically avoid all high price stocks, valuations, because market is available so cheap. So look out for stocks basically which are cheaper.
Nishchal, your take on pharma, lots of volatility in that sector and news flow. It's got its fair share of news flow also this week.
So I would wait and watch out for the news flow because it could be a bit disturbing given what President Trump is talking about. If there is tariffs basically, I think one should be cautious on that sector at the moment.
Okay. Nishchal, you've spoken about private banks a bit. Talk to us about PSU banks. They've also seen a bit of a correction. Good time to maybe nibble on?
Yes, I agree with you basically. I think good time to start looking at it. But then it should be more of a trading bet rather than actually an investment bet because I think the valuations are very close to the private sector banks. And that's why one should be just taking a trading bet there.
Nishchal, you're our new favorite guest on the show because I was expecting to ask you 3 questions. I've landed up asking you 6 and you've answered all of them. So thank you so much. And my producer isn't unhappy about that. So we'll let you go. Thank you so much for coming in and speaking with us.
Thanks a lot.
Okay. Now, critical. We've done this a couple of times today, but good to know. We've done a market survey, a fund manager's market survey, which kind of shows that there is cautious optimism, especially with geopolitics in the spotlight. Only 40% of experts expect the Nifty to cross its previous high in the first half. In fact, I believe that that's a very high number, frankly, while a majority remain unconvinced that markets can fully recover to all-time highs. Let's get that poll underway. Ashesha here with us.
Well, yes, we are living in uncertain times, and at a time like this, we decided to conduct a market survey to understand and assess what markets could look like in FY27 and what could the performance of equity markets be. So the first and the most important question, will markets hit that record high once again in the first half of FY27 itself? Remember, 26,373 is the Nifty all-time high. 40% of the respondents believe that yes, we could scale past that all-time high in the first half of FY27 itself, but 60% of the respondents believe that we will not be able to achieve that, of course on the back of geopolitical uncertainty that we are facing in the global market. Shifting focus to a couple of other questions we got answers to. What will the key growth driver for the market be in FY27? 10% respondents believe it could be earnings growth. 90% of the respondents believe that it will be easing geopolitical tensions, and that is the factor which will drive equity markets in FY27. So yes, easing geopolitical tensions will be one important factor that you need to watch out for. FII exodus has been a big problem for Indian equity markets. Will they make a comeback? That's another big question. 80% of the respondents believe that yes, they will make a comeback in FY27, but other 20% believe that FIIs will not make a comeback in FY27. So FII exodus will continue to remain a problem for Indian equity markets going forward as well. The biggest risk to the market, clearly 50% respondents believe that it is geopolitics, and the other 50% respondents believe that India Inc. earnings downgrade will continue to remain a drag for the Indian equities going forward. So geopolitics and earnings downgrade, these are two factors that you need to watch out for, the biggest risk for the market right now. Where will the rupee trade? Remember, rupee has depreciated nearly 15% since the time the war broke out, and 50% respondents believe that it could trade anywhere between 90 to 92 versus the US dollar. 30% believe it could be 92 and 94, and the rest 20% believe that it could scale past that 94 mark and it could sustain at that level. So that's as far as the rupee depreciation is concerned versus the US dollar. Meanwhile, what should the strategy be right now? What should you do at this moment? Should you buy on dips? Should you sell on rally? That's another big question. 70% of the respondents believe that you should buy on dips at this point in time, but the rest 30% believe that it could be a sell on rally market. So that's as far as the strategy that you as an investor should adopt at this point in time. Shifting focus to the ideal cash allocation then, less than 10% allocation. 50% of the respondents believe that you should have less than 10% cash allocation at this point in time. The other 10% believe that it should be between 10 to 20%, and 40% of the respondents, quite interestingly, believe that you should have cash allocation of more than 20% at this point in time. So cash allocation, given the uncertain times that we are living in at this point in time. Let's also talk about themes and sectors which could outperform going forward. Domestic consumption 20%, capex and infra 20%, manufacturing in 20%, but interestingly 40% of the respondents believe that financials could outperform going forward. So that's one important theme that you need to watch out for, the banking and financial services sector. Which sector will outperform? That's another important question. And as I just mentioned, banks and financials, clearly fund managers and market veterans are very bullish on the banking sector. Defense at 10%, IT at 10%, and healthcare and pharma at another 40%. So banks and healthcare and pharma, these are two sub-segments of the markets that investors are most bullish on. Will gold and silver beat equities? Of course, we have seen a lot of up move when it comes to the precious metals basket. 20% of the respondents believe that yes, the up move and the outperformance for gold and silver will likely continue this year as well, but the rest 80% believe that perhaps the up move is over and they will not beat equities in FY27. So those are some of the big questions that we got answers to from the fund managers on what the outlook is for Indian equity markets in FY27.
Okay, Ashesha, thanks so much for taking us through that. So yes, very interesting survey put together by Ashesha, and yes, the results of that are also quite interesting to note about what the strategy should be going ahead. Well, that's about FY27. Let's worry about what the next week is going to look like, because we're taking one day at a time when it comes to a market like this. But the entire narrative now is going to depend on what the rupee does and where crude levels take us. And in fact, the global equities will also be dependent on that. Most major markets shut on Friday on account of Good Friday. So we'll be seeing the impact of everything that happens happens geopolitically bright and early on Monday morning, beginning with Asia, then our markets, and then the US markets later in the day. So much to look forward to. But before that, we'll have to wrap up the show. See you bright and early Monday morning. Thanks so much for tuning in.